Bitcoin's gallop to a new all-time high in excess of $70,000 is grabbing lots of attention. But in marked contrast, gold's surge to fresh peaks above $2,150 an ounce is attracting almost none. Gold miners remain largely neglected as well, as evidenced by how Endeavour Mining is about to be relegated from the FTSE 100. So contrarians may feel this is an interesting time to think further about the precious metal and its producers, especially as FTSE 250 member Centamin is scheduled to release its full-year results for 2023 on Thursday the 21st of March. The case against gold generally goes as follows. It's little or no industrial use, it's largely inert, it's difficult and expensive to mine, it offers no yield, comes with the cost of ownership through storage and insurance, and, as such, should carry an intrinsic value which is no higher than its actual cost of production, of which more in a moment, but that's roughly a third below where the gold price is right now. Gold bugs, well, they'll argue that this is to all miss the point, and they'll counter by arguing that gold has been money since time immemorial, supply grows slowly in marked contrast to the supply of paper money or fiat currency. Gold has matched the S&P 500 stride for stride in capital terms since 1971, when President Richard Nixon took America off the gold standard and smashed up the Bretton Woods monetary system, although we do have to note that US equities have offered dividends as well. Gold miners are looking very cheap relative to gold, they will say, as benchmarked by the New York Stock Exchange Gold Bugs Index, which is no higher now than it was in 2003 when gold was $385 an ounce, and gold mining stocks can and do generate a yield by paying dividends when all is going well. And so, the battle lines are drawn, but it's interesting to see gold, purportedly a haven asset and one that tends to shine when there's trouble elsewhere, doing well when markets seem to be in risk-on mode and feeling positive, judging by how tech and biotech stocks are thriving, and the US, Japanese, French and German stock markets are all setting all-time highs. Possible explanations for gold's 14% advance over the past year and 60-80% gain over the last 5 in dollar terms include geopolitical tensions, notably wars in the Middle East and Eastern Europe, the prospect of interest rate cuts from Western central banks lowering the opportunity cost of holding gold by reducing returns available from cash and bonds, and galloping growth in government debt on both sides of the Atlantic, which may oblige central banks to cut interest rates to ease the pressure on the authorities' interest payments on their bonds, even if inflation is not yet totally under control, and gold did do very well in the stagflationary 1970s. Only you can decide which view to take after careful research. And if you do decide that gold or its producers or both fit well with your overall portfolio strategy, target returns, time horizon, and appetite for risk, then you need to apply 6 tests to any gold mining stock that you'd care to examine. You'll need to think about whether a gold miner is already producing, or in the exploration phase, or is just in the process of obtaining or making the most of a license. You'll need to think about if it's in the production phase, then the next task is to assess the size of its resource and the production profile of existing mines. This chart shows the annual production of London's leading main market listed and AIM-quoted miners, Endeavour, Centamin, plus Resolute Mining, Shanta Gold, Hummingbird Resources, Pan-African Resources, and Charat Gold. Then think about where the company operates and the risk or otherwise or difficulties with local governments over mining rights and taxes, as well as the susceptibility of individual mines to problems posed by difficult conditions such as weather or geology. Then look at the company's all-in sustaining cost, or ASIC, of producing an ounce of gold, as this should reveal how profitable or otherwise the firm will be relative to the prevailing metal price. Some miners publish a cash cost figure, but this may not include third-party smelting, refining, transport costs, local taxes, office running costs, so it may not give the full picture. Key cost variables also include staff and diesel and fuel, and they can be affected in turn by local currency movements in the countries where the mines are situated. Then look at the experience and skill set of the management team and executive board. And sixthly and finally goes to the miner's balance sheet and how much cash or debt it has. The more of the former and the less of the latter, the better, especially should gold prices drop. In terms of sentiment specifically, Its shares stand at barely half the peaks reached in 2010 and 2020, despite gold's recent gains. The company produces gold at its Sukari mine in Egypt, has an exploration site in Côte d'Ivoire, and 2 early-stage projects, one each in Egypt and Côte d'Ivoire. Watch out, therefore, for any commentary on Egypt's economic woes, the end of capital controls, and any implications of the country's $8 billion debt restructuring with the International Monetary Fund. Centamin's detailed trading update in January revealed 2023's output and all-in sustained cost at 450,000 ounces and $1,220 an ounce, respectively. It also gave guidance for 2024, with respective ranges of 470 to 500,000 ounces and $1,200 to $1,350 an ounce. Those AISCs are way below the current gold price, so these numbers should be a good test of whether literally sitting on top of a gold mine is all it's really cracked up to be. Centamin is expected by analysts to show a healthy increase in operating profit in 2023 to $228 million, and then to $316 million in 2024, for operating margins of 26% and 33% respectively. Do keep an eye on capital expenditure, which came in lower than budgeted at $204 million in 2023, and then cash flow, as it's cash flow that funds the dividend. The first half payment was cut to 2 cents from 2.5 cents a share, but analysts expect increases going forward, assuming gold holds firm, and the development of both Sukari in Egypt and Doropo in the Côte d'Ivoire go to plan. I hope that you and your families are all well. Thank you for watching, and I look forward to seeing you again next time.